On today's broadcast, we will be discussing building your perfect portfolio. So get ready. Focus Planning Group's education series begins now. You have likely been to a financial advisor before who used a subjective risk questionnaire based on psychological theory, not quantitative math. This dominated the industry for decades, and only recently has a new option arose for accurately assessing how we invest something very important, your money. Subjectivity has perpetrated stereotypes in the past. If you are young, you must be chasing aggressive growth. If you are of retirement age, you must be extremely risk adverse, etc. The problem with subjective risk questionnaires is that they nearly always miss the mark. At our practice, we utilize a much different approach. We use math to pinpoint your exact risk tolerance. Using an award-winning technology that is based on a Nobel Prize-winning framework, we are able to quantify your risk tolerance into a simple risk number between 1 and 99. This is based on the actual dollars that you have today to assess how much you are willing to risk or lose in exchange for an opportunity at a specific gain. This results in a quantified and objective outcome, which you are in charge of. If you think that the results are off, we have a more detailed approach that can help you drill down to your specific comfort zone. Our approach boils down to 3 simple steps to help you identify your financial goals and meet your expectations. Unlike many of my competitors, this approach ensures that every decision we make is centered around building the perfect portfolio of investments for you. To capture your goals and objectives, we start with capturing your specific risk number. This analysis and report is called your risk fingerprint, and for a multitude of reasons has been often referred to by our clients as their sleep number. After we pinpoint your exact risk number, then we analyze your current investments to see if they line up with your true risk-reward tolerance. We then tailor your current portfolio or build you a new one to align with your unique risk fingerprint. Finally, we will look at the big picture and chart a clear and intuitive path towards your retirement goals. When finding your risk number, we use a simple and intuitive questionnaire that is available on your desktop or mobile device. After we identify your risk number, we will look at your current portfolio and see how it lines up with your true appetite for risk. 4 out of 5 investors have more risk than they know, and more often than not, when I talk to a new client, we will see a situation like is illustrated in the presentation image. The client's risk number is 54, but they are invested like an 86. This means it's time to reassess their investments and get them on the right track toward achieving their financial goals. The good news is, even if your current investments are over or under leveraged for your risk tolerance, we will ensure that moving forward they are in sync. After talking more about your goals and objectives, hopes and fears, we will offer different financial advice which we will ensure matches your risk tolerance before we purchase anything. You will also be able to view your dividends and expense ratios all in one place to ensure that we meet your specific objectives. Once we get your portfolio risk aligned correctly, we can dive deeper and look at the risk versus reward potential in a visual format for each investment opportunity. This is a tool that is powerful enough to meet my needs and simple enough for you to understand without a degree in mathematics. Our stress test shows you how portfolios would have fared during significant market environments over the past 8 years. Explain more about each market condition and why the portfolio would have underperformed or overperformed in each situation. The final step is for us to take a look at your long-term goals and come up with a strategy for your retirement. Using your current investment amount, monthly savings amount, risk number, retirement year, and monthly withdrawal amount, we can predict the amount you will need for retirement and what the probability of you achieving your results is. This is a big decision, and we don't have to decide all at once. But the good news is that we can plug and play to instantly see how changes in the variable amounts affect your ability to meet your retirement goals. For Focus Planning Group's education series, this is Joe Carbone Jr. Until next time.